We're here on the Swiss yen. We have a flag pattern that I've just got involved with. I'm going to do the higher time frame analysis and talk you through this trade setup. So on the dailies, there isn't a great deal for me. We've had quite a directional move lower into these wicks. We could see some buying pressure here at any point, and you can see we are actually seeing a move higher. We could potentially come up to the wicks here, so I'm expecting a move higher. On the 240, just remove that. Simply that we are moving higher. We do have an AB equals CD pattern, which has not yet completed up here, coming into this key level of structure. So for me, just looking at this, we are getting close to the AB equals CD pattern, but not yet completed. On the 60, we have a move higher. Outside return, new high, outside return, new high, looking for an outside return, highlight the wicks, those wicks come down all the way to there. Anywhere within this zone I would be looking for long opportunities. We draw a trend line on the closes of the candles, move it down, minimum of 4 touches, 1, 2, 3, 4. Also, does it hit a minimum of a 38.2, ideally a 61.8? Yes, it does. Do we also see the market come down and test the fourth test? Do we then see a positive candle? Yes, we see a green candle. We wait for this confirmation because the red candle shows that structure held, the green candle shows that there is some buying pressure at that level, and the wicks held. So in terms of targets, we are in trend and there is room to the upside, so I would be looking for a 127 extension, 127 only. Now we are shooting beyond our structure level, but look, the very highs of our structure level come in here. This is not a definitive structure level, but it is a structure level to pay attention to. So in this instance, targets, if I just bring them on, I've played for 4. I'm going to make that 5 pips before. Stops just going ATR below the low because we have our structure level, we're in trend. We've had the confirmation for my entry. So 21 pips. Just one thing to bear in mind, my stop is at the 109 psychological number. Usually I like to be behind it. However, you know what? No. I've got a very good reward to risk here. I'm going to be 5 pips below it. We are in trend. Even if the flag fails, we have a high probability the trend is going to kick in here and carry the momentum on up, and I do have the reward to risk to do this. So just 24 pips of risk for a reward here of 54. And we're back for the update, and what a damn shame. We got the breakout right at the level I was looking at. We retested the highs. I implemented risk management, which is when we retest the highs and fail to put in a new high. I moved to break even, and we came back down and I stopped out after being quite a lot of pips up, 30 odd pips, I don't know, 40 pips maybe. What a shame. Going for 2 targets here, obviously would have banked half my money. Moved to break even, but we were in trend. You know, we had confirmation we could have gone higher. So a break even trade.